It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I am Arjun Patsarthi, and in this newsletter for the week, we are going to talk about the fact that would there be a crisis that is coming up in the corporate bond market, and like what happened in 2008 and in the COVID times, and when this crisis hit the market, many investors suffered huge losses. One is because of corporate bond defaults, or the prices of corporate bonds came down very sharply, and all the investments saw a deep loss in value. Now, the case for these corporate bond crisis coming up is pretty evident in the sense that interest rates are rising and that money is getting tighter. And this is because central banks, from the Fed to the ECB to all other central banks, Bank of England and RBI, are in the process of raising rates because inflation is trending way higher than what they were expecting. Especially in the developed world, inflation is at 4-decade highs and it's hitting the population hard. And with interest rates at almost 0% or record lows, central banks have to clearly have a lot of work to do, because if inflation tends to go higher, then there could be instability in the economies. Right? And when this inflation and liquidity gets tight and interest rates rise and money gets tighter, then corporate bond issuers too gets affected very badly. And how they affected is because investors tend to look at corporate bonds as much riskier assets when liquidity is tighter. And if interest rates are high, and if there is enough interest rates that are given by government bonds, then they would rather invest in government bonds than in corporate bonds. And how does this affect the corporate bonds issuers and the market? It's because when corporate bonds issuers, when the bonds come up for maturity and they don't have the money to, in the internal resources, to repay the investors, and they go to the market may not give them the money. And if they don't get the money, they have to go to various sources or even default. And this is what happened in the 2008 credit crisis and in the 2020 COVID crisis. Now, central banks came and protected the corporate bond market at that point of time. But now the central banks are actually driving this tightening of interest rates and money, and they can't protect the corporate bond issuers. So this could be a big problem. So the concluding part here is that what investors have to be extremely aware of the kind of credit risk, that is risk on corporate bonds, that they are taking. And when they invest in corporate bonds, in either directly or through products like mutual funds and AIF or PMS or any other product, then they need to be aware whether the corporate bonds they are investing in, even though they are yielding higher returns, can actually refinance their debt when things get tough. And it's very important for issuers to understand this before investors to understand this before they start to invest in corporate bonds, or they need to relook at their portfolio currently and see where there is risk in the portfolio in corporate bonds. So investors have to be extremely aware of what they're going to invest in, because we are going to see a lot of issues coming up from corporate bonds in the public debt space for retail investors and for in other spaces. And investors have to be extremely vigilant and careful. And obviously, the best place for them to come to get information, get the risk levels of corporate bonds and other prices, etc. Most transparency as well is INR Bonds. Download the QuickInvest by INR Bonds app, where we have curated a list of corporate bonds, which the most information, high transparency. We have our own proprietary risk score that is based on all factors, that is driven by the markets and by the economy and by the issuer as well. And it's completely unbiased. And hence, the investor gets the best knowledge of the investment. And be aware of the risks that you've taken. Corporate bonds is the takeaway from the search for yields. Thank you very much for listening in, and do follow us on YouTube if you have not followed us already.